I'm just wondering what really drove this overseas expansion and for you to acquire and raise your stake in Bigo there. Is it to basically offset kind of what we're seeing in the domestic market, which is sales a little bit stagnating now?
I think it's a dual engine strategy. So in China, we continue to be the leader in this industry because we invented this live streaming model a decade ago, and we keep innovation and promotion of a lot of new product. But we also think globally there's massive opportunity, starting with Southeast Asia and gradually into developed world for the live streaming business. That's why we make the full acquisition of Bigo business. And we do think that will create a lot of synergies. First of all, it will help us to expand our global markets at a much faster rate. So YY can leverage Bigo's existing footprints in many countries and regions. And Bigo can also benefit from YY's expertise in live streaming model. Secondly, we will combine the data and also AI technology at the back end. So that allows us to analyze the data better and push the relevant content to the right audience. Last but not least, with the increasing scale, we can leverage on the purchase of the bandwidth and also on the sales marketing events. So we do think this will create 1 + 1 bigger than 2 synergies.
Yeah, it seems you're spending that amount of money to get all of that. Hopefully, of course, big data is very important. So in terms of just how the business will evolve the next 5 years or so, because 95% of your business is still live streaming.
Yeah.
How does that breakdown of revenues evolve over the next 5 years, given this acquisition, given, of course, your other endeavors as well?
Yeah, I think it will still mainly come from live streaming, but in terms of the regional composition, over half of the revenue in the next 3 years will coming from overseas. As I said, we do think globally there's a demand for live streaming business, both from the audience perspective and from host perspective.
Just in terms of Bing Jin, hello, it's Tom McKenzie here in Beijing. Just in terms of the China-focused business, YY Live, it saw profits falling, 20% in the fourth quarter, margins being squeezed. Do you expect you're going to have to continue to spend quite heavily, as David touched on things like marketing, given the increasingly competitive landscape here in China?
Right. I think, first of all, if we look at the market growth of live streaming business last year in China, actually is 50% year-on-year growth. So that indicates a lot of newcomers come in, which they learn from YY's expertise, and particularly they help to educate the market in terms of the audience and in terms of the performers. So I think that's a good thing. Secondly, this is not a zero-sum game market, meaning everybody is taking share from the non-video-based content and non-live streaming-based content. And for the live streaming business per se, I think YY continued to be the leader in this industry. We invented a model called Happy Contest in 2017, allowing different hosts to compete across different rooms and immediately driving the paying ratio and ARPU for paying users. So I think as YY continue to be the leader in this industry, we'll continue to innovate new features in live streaming business.
How much of a headwind is the uncertain regulatory environment here in China?
I think government, of course, will be more stringent in terms of content screening. But again, live streaming has been regulated for many years. So we have been very particularly stringent in terms of content screening. We had a manual team plus AI-based machine learning team to screen and monitor content 24 hours, 7 days. So I think this doesn't impact the big players like YY. The smaller players tend to be more impacted.
Yeah, I'm just fascinated by the whole micro-tipping thing. We were just talking about it during the break, where you basically, YY gets a chunk of what viewers do is they tip your bloggers, your celebrities, your influencers. And it's a very successful revenue model for a lot of companies like yourself, but it hasn't been replicated in Western companies. Why do you think that is? And what would it take to kind of bring that revenue model to Western companies?
Sure, I think it's a cultural thing. So in China and Southeast Asian market, people generally are very shy. So they were not used to go to offline menus and tip, but they still have the demand psychologically. That's why we invented this model a decade ago, allowing the audience to tip in the live streaming room to buy virtual items. So whenever they tip, we had a tiering system. So if they tip more, they get to a lord, they get to a duke, they get to a king or queen, and they get a lot of privilege in that virtual room from the host. And that's why I think that satisfaction is universal across many country regions. It's just we start with China and Southeast Asia first as a first step. But gradually we'll also replicate this model to developed world. Because in the US, people tend to tip a lot in offline setting.
Restaurants.
And people also pay for good shows. It's just there needs to be a model combining these two together.
Could crypto be that solution, you think?
I think so.
Yeah.
We are seeing that trend already. That's why we determined to acquire Bigo. Bigo already is quite successful in some of the developed world already.